Have you seen this headline? An AI just predicted Bitcoin at $150,000. It's from a very reputable source. So is this the biggest Bitcoin prediction we have ever seen? A crypto analyst says Bitcoin could surge to $150,000. The reason why Bitcoin could go up to $150,000 is because of an effective supply shock. You can see in May, there were 12.6 million Bitcoin being mined. It goes higher, and that is the argument of this crypto analyst. He believes that the supply of Bitcoin will continue to drop because miners will continue to shut down their machines. And if that's the case, then we could see a major run-up in price. Fast forward to November, only 8.7 million Bitcoins were mined. That is a huge drop. If the answer is yes, then we could see a major run-up in price. But if the answer is no, if institutions also decide to sell, then Bitcoin could continue to drop. Right now, it looks like the balance of power has shifted towards the sellers. Both retail and institutions have been net sellers for quite some time now. So it really depends on what they decide to do next. Will they continue to sell, or will they start buying again? Only time will tell. This is the big question. Will the demand for Bitcoin continue to stay strong during a recession? Because remember this, during a bull market, everybody wants to buy Bitcoin. Everybody wants to get in on the action. Everybody wants to buy the dip. But during a bear market, things are different. During a bear market, people panic sell. People don't want to buy the dip. They want to sell the dip. And this is where things get very tricky for Bitcoin. Another metric from Glassnode shows the hash rate for the Bitcoin network. The first group is retail investors, like you and me. Here's a chart showing the retail buying and selling pressure for Bitcoin. You can see during a bull market, retail investors are net buyers. They are buying way more Bitcoin than they are selling. But during a bear market, they tend to panic sell. Look at this chart here. This shows the percentage of retail investors holding the bag for Bitcoin. You can see this percentage goes up during a bear market. Why? Because more people are selling Bitcoin than are buying. More people are giving up on their positions than are holding. And the second group is institutions. Both of these groups have been buying Bitcoin for quite some time. In fact, the institutional buying has never stopped. Just take a look at this chart from the block. This shows the amount of Bitcoin held by public companies. You can see since 2020, this has been going up until the recent dip. So institutions have been net buyers of Bitcoin. The hash rate represents the total number of computations being performed to confirm transactions and generate new Bitcoin being added to the network. The lower the hash rate, the more difficult it is to spend your Bitcoin. When the hash rate gets lower and lower, it means that the mining difficulty is getting harder and harder. And when it gets harder and harder for miners to actually mine Bitcoin, guess what happens? They shut down their machines. And this is exactly what's happening right now. Miners are shutting down their machines because it's not profitable to mine Bitcoin anymore, especially with electricity prices being so high and the price of Bitcoin being so low. This person said in a Bloomberg interview, he expects a lot of volatility ahead, and Bitcoin could be heading for a lot higher than its current price. This was on December. At the time of the interview, Bitcoin was at $17,340. It is currently at about $16,500. That is a huge difference between where we are today and where Bitcoin could be heading. Is this the proof that Bitcoin will go to 150K? Not so fast. There's a big catch. The first one, of course, is the collapse of The second one is the collapse of Three Arrows Capital. And the third one is the Genesis Global Capital Loan default. These three events have led to a huge drop in Bitcoin mining. Let me show you some data here. Before we talk about what the catch is, let me read you this article. This is from Bloomberg. This analyst makes a very good point. He says Bitcoin has been going through a supply shock because of three major events. This is from And if the supply of Bitcoin continues to drop, but the demand stays the same or goes higher, guess what happens to the price of Bitcoin? But there's a big catch to all of this. The demand for Bitcoin is driven by two groups of people. What about retail investors? Well, this is where things get very interesting. So here's the big question. Will institutions continue to buy Bitcoin while retail investors are selling?